Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, Grace Ormsby here. Welcome to a brand new episode of the Smart Property Investment Show. One of our favourite things about the Smart Property Investment Network is the fact that we get to talk with investors all around Australia about their property journeys, because no investor's journey is the same, is one of the big things that we've been learning over the years that we've been doing this. So it's an absolute pleasure for me to be welcoming via Zoom, obviously, but we're still operating in a COVID-safe way, Daniel Lamp. Welcome to the show.
Thanks for having me.
How's your week going, Daniel?
Yeah, going well, thanks. How's yours?
Yeah, pretty good. I'm excited to hear what you have to say today. But first of all, where are you coming to us from?
Yeah, so I'm an investor based in Sydney. Excited to be on the show.
I know that you're a doctor, and we're going to get into that a little bit later in the show, but you have sort of worked across Australia, which I think, is it fair to say that that's had a bit of an influence on your property journey?
Yeah, I would say so. So I grew up in Sydney. I studied medical school at Newcastle, and also I've been working 5 years now as a doctor. Worked in a variety of places, as far as Broken Hill, kind of small country towns, also in Queensland up towards the Mount Isa way. It's interesting to compare property markets, and property investing is definitely a hobby, passion of mine.
So what actually originally got you started on the property ladder?
Yeah, definitely. So I think from a young age, the importance of saving and planning for financial future was instilled in me. So when I got my first job at the age of 23, I had a deposit saved up behind me, and I was, really excited to get going. And I guess the planning ahead for financial future, and obviously Australians love property, and it's a major source of wealth for Australians.
23 is pretty young to be buying your first property, especially if you were only a graduate then, It's not like you'd been working for 5-6 years prior to that to be saving that money up. How big of a deal was it for you to get those keys to that first place?
Oh, yeah, definitely very nerve-wracking. And I think I listened to podcasts and such as Smart Property Investment, and also reading books. So I did that in the lead up to my first job. And then once I had the funds saved up, and once got some pay slips and talking to mortgage broker, was able to pull the trigger.
And had that always been the plan the whole way you were going through uni? Because, medical school's tough. It wouldn't have been, you wouldn't have had much time to be thinking about things other than, what you were studying. How much pre-planning was there in that process?
Yeah, so I think, it was a gradual thing towards the end of university, planning ahead. And also, I believe that, I need to instill good habits even from, younger age. Medical students, like uni students, not particularly well off, and also junior doctors, starting salary, 60,000. However, also in the hospital system, come across some, very senior doctors on huge incomes that maybe some of them hadn't planned ahead so much about, their financial health as well. And so I was motivated to make sure in my professional life to also plan ahead, look after myself as well, so that, can have more financial freedom and choices in the future.
That is a pretty interesting observation, that you did see people that were so far ahead of you in their medical career still not really settled and having anything to show for what I'm assuming is a lot of money that they'd be on. How did those conversations kind of happen? How did you see that people were in those positions? And because obviously something had to have sort of spurred you on to go, I don't want to be like this.
Yeah. So I guess, yeah. So obviously some specialists, senior doctors are on high incomes, and I guess kind of anecdotally, some of them, despite the high incomes, have a high lifestyle. I think lifestyle creep was something I read about once, and I could see it in action. If you're earning, $500,000, but you're spending $500,000 a year, then, there's not much left over to show for it. Some people with certain lifestyle, cars, private schools, etc., multiple overseas holiday. I guess for me, coming from my parents, not a particularly well-off background, that, it's important to save and plan ahead. So I think those habits are important. And so I'll go back. So I believe that financial habits, such as saving, spending less than you earn, sounds simple, but it is definitely very important and one of the first steps on the property journey.
And I don't want to delve too much into, the medical side of things, but it is a high stress career path, isn't it? And I'm assuming for people that aren't looking after that financial health as well, it's going to add to the stress levels that people are already feeling. Did that play into it for you at all?
Yeah, definitely. So I guess I also had some friends and colleagues who, very busy at work, working, up to 60 plus hours a week. And maybe they had, for want of a better word, a spruiker, whether it be through accounting or something else, introduce an off the plan property or a house and land package in, an area with oversupply, then get locked into the contract. And in one of the cases, when it came down to settlement, the bank valuation came in, quite substantially lower. So, just starting out in the career, making these mistakes can be very costly. So I saw in myself, even though I was busy with my work, I still prioritize learning about investing, educating myself, still, going on some holidays and having a life as well. But I saw that it was vitally important to look after, to become, financially literate as well. Because, just because you've gone to medical school doesn't mean you're particularly educated in finance and property investing.
Some wise words there. We're going to take a quick break, but we'll be back soon with more from the doctor himself, Daniel Lamp.
Do you want to achieve wealth and passive income through property investing? PK Gupta helps a community of over 10,000 investors achieve passive income by buying top 5% growth and simultaneously positive cash flow property using data, without wasting months doing research, spending weekends at inspections, or dropping $15,000 on buyer's agents each time. So, if you're overwhelmed with information overload but don't want to drop $15,000 on buyer's agents each time, check out PK's website, consultingbypk.com.au, and learn to build passive income through data.
Welcome back to this episode of the Smart Property Investment Show, where I'm joined by Daniel Lamp, a doctor, Sydney-based. Daniel, I know you started investing young at 23, and you were talking before the break about the importance of financial health. How much of an issue do you think it is that people don't really understand what it takes to look after that financial health?
Yeah, definitely. So I've got friends both in the medical and also non-medical, but still, professional fields where basically, when you're younger, you might think that, your incomes are just going to increase and no need to plan for the future. But also, understand the importance of compound growth, in the wise words of Warren Buffett, that it's very important to start young, have the habits young, and also to, as I alluded to earlier, make, the correct property decisions early, as good decisions will compound and avoid making mistakes.
I think you'd probably have the same to say about health, but do you feel like there is a lack of education available to young people about some of this stuff?
Yeah, definitely. In school, you're not particularly taught about finances or investing, neither high school or university, and you kind of have to fend for yourself in a way. And so that's something I'm passionate about. And I guess one of the reasons I came on today to raise awareness and share my story to the smart property investment.
Amazing. Thank you so much for sharing it. And we really do appreciate it. And we would encourage anyone else who is out there listening along going, I have some properties, it's not a big commitment to come on the show. And we're always looking for new stories to showcase and highlight just how differently everyone can approach this journey. And Daniel, let's talk about your properties now. So you started investing, you bought your first property at 23. That's correct, isn't it?
That's correct, yeah.
Talk us through that property.
Yeah, definitely. So my first property was in the north side of Brisbane. Purchase price was all in for $560K. Sourced land and then built a house on it for a reasonable price. And was rented out straight away. No issues. So it was nerve-wracking at the time, but I'm glad, started somewhere.
So Daniel, can you talk us through that first purchase that you did make and why you chose north of Brisbane?
Yeah, definitely. So my first property was in northern coastal suburb of Brisbane. At the time, Brisbane seemed like good value, had been flat for a while, and I used a buyer's agent to help me, select the suburb. We ended up going for a strategy of sourcing a piece of land that was undervalued at the time and then constructing a house on it. And it was good that it was rented out straight away, healthy rental yield of about 4.8%.
So where were you working at that time?
Yeah, so that was my initial job internship where I was based at Concord Hospital in Sydney.
Okay, so did you go see the property before you did buy, or was it unseen?
Oh no, I ended up seeing it after it was completed, and so it was very exciting when I got to see it.
Okay, so it would have been pretty nerve-wracking to buy sight unseen, and then not see any of it all the way up to it being built. Just how daunting was that in itself? Or how much I know you said you used a buyer's agent, how much did that help?
Yeah, so definitely interstate investing can be tricky, but I had done, research myself into the area, and I agreed with the buyer's agent about the future potential of this suburb. And also I was updated along the way with photos, progress reports, and the numbers made sense. So that's why I went for that investment as my first. Amazing.
And you talked about having both a broker and a buyer's agent. Do you see the team as being a really, really valuable and important part of property investing?
Yeah, definitely. I think working in healthcare, you understand everyone has their own role and you draw on it. It is a team effort for the, best outcome for the patient. I guess there's parallels with that in the investment world. You have teams such as a buyer's agent, mortgage broker, accountant, working together for the best outcome for the client.
So you had an accountant at that point too?
Yes, I did.
So you were very well prepared. Is that, you obviously had to build this team around you. How long ago was this?
This was, when I was 23 years old. So 5 years ago now. Yeah.
So you were well ahead of the Brisbane boom too. You must be really glad you got in when you did.
Yeah, it has been good timing.
And I know that it's not the only property that you do have. Can you talk us through what you've purchased since?
Yeah, definitely. So the second property I purchased a bit over 2 years ago now, also in Brisbane. This one I decided to go by myself, I guess you could say, develop a bit more confidence. I could still see Brisbane was undervalued at the time, factoring potential for growth and also good rental yields. So I decided to hone in on the south side of Brisbane in the suburb of Salisbury. And basically I spent a few weeks to months researching the market, identifying areas, close to amenities, etc. And after a week of working 12-hour shifts in ICU, I decided to fly up to Brisbane and lined up, can't remember, it might have been 10 properties to inspect in one day. I found one I like, submitted an offer, and it was accepted, which was very exciting.
So talk us through some of the specs on that property.
Yeah. So that purchase price was $625K. The rental yield, I think initially was slightly lower, 4.5%. So I think it was initially rented out $500 a week, but with rental increases in the last 2 years, it's really amazing. It's gone up. Most recently rented for $600 a week.
So that's even through COVID.
Yes.
Yeah. So that you've got 2 properties now, don't you?
That's right.
Yeah. And I know that you've recently had them all valued and, had a look at how much capital gains have sort of developed within those purchases. What are you looking at with that portfolio now?
Yeah, definitely. So the first one I purchased at $560K, it did get valued not long after at $650, which a huge jump. It has plateaued a little bit, but most recently about $770, which is still good. And my second property I purchased for $625, and recent comparables close to $900. So second one in particular has done very well.
There's some pretty sizable gains. How did you actually purchase that second property? Was it leveraging that first one?
So I guess with good saving habits, and also it was difficult lending at the time with the Royal Commission. So I ended up putting in cash as a deposit for the second one. Had to pay a little bit of LMI, but, looking now, it's worth it.
Yeah, it's interesting because we do see a lot of people using that first property to then be leveraged the second and third. Was it just the circumstances at the time that it was just easier to go in cash or?
Yeah.
Yeah,
it was a difficult lending environment, 2019 at the time, pre-election. And I guess it was also, again, a bit of good timing that, after I settled on the property, not long after was when, the federal election result and the property
and everything went bananas. So then what are you going to do with that increase in the equity that has sort of been realised through those properties? What are your plans?
Yeah, definitely. I think having a look at the moment and, at the moment considering buying a third property, potentially a PPOR in Sydney. So I think that's also reflects about, planning ahead. And so I guess the decisions I made, in the last few years have set me up, in a better financial position now.
So will you draw on the equity there or will you still use that strategy that you've got?
I guess I'll consider my options and have a chat with my mortgage broker. Yeah.
We're going to take a quick break there, but we'll be back soon with more from Daniel Lamp.
Are you wondering where to buy an investment property right now? Why not let Buyers take the guesswork out of it? We can find you the right place on or off market at the right price. An investment professional from our national network of buyers agents can help you save time, money and stress and deliver you a tailored solution. Talk to us today. Call 1800 975 051 or visit buyersbuyers.com.au.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Daniel Lamp, a doctor who sees the importance of property investing as, I guess, an aspect of financial health. And coming from that health background that you've got, Daniel, I can see why you would be feeling that way about it. We've talked already about there not being much education around the importance of financial health. And that's obviously what's led you into your property investing journey yourself. So, Daniel, you do have these plans, to get a principal place of residence coming up. It's a pretty crazy Sydney market at the moment. We do see a lot of people talk about getting their forever home and then that's sort of it for them. But I think it sounds like you've got plans to keep investing and keep growing that portfolio. So what will it be after you do buy a principal place of residence?
Yeah, definitely. I think I definitely intend in the next few years to grow my investment portfolio. Obviously, it's an interesting market at the moment with basically all of Australia going through an increase. But I plan to diversify, potentially look at, other cities such as Perth and Adelaide. And I would draw on investment experts as well to help me with these goals. And potentially look at some commercial as well. Yeah.
Okay. So with that diversification, what kind of properties do you see as providing the best value for you in your individual circumstances when you're looking to buy investment properties?
Yeah, definitely. I think lessons I've learned, I guess I'm still relatively early in my journey, but it is definitely a mix of capital growth and the rental yield. As I can see, The second property I purchased, which had higher capital gains, has had more, maintenance issues, I guess, with a larger kind of land to asset ratio. So I think definitely for my next properties, I'll be looking at a mix of good location, good capital growth prospects, but also balancing up with a healthy rental yield. And
what is the ultimate goal for you with this property journey? Because, and it's obviously going to change. It's not something that I expect you to look back in from 10 years from now and go, yeah, it's all stayed the same. But what are you hoping to achieve from this journey?
Yeah, definitely. I think property investing will enable better financial health and more choices, I guess, in the future. Potentially can decrease hours part-time, because I guess, working with other doctors, I can see, some of them working, 60 plus hours, on call, multiple times a week. And I can sense that they would, like to have the ability to cut down hours or cut down on call. And I think planning ahead for the future, setting up an asset base, which will have increasing cash flow as you move forward, I think that definitely improves choices. And if we have, healthy doctors who, with recent issues talking about doctors burnout, even in this COVID situation, I think if the doctors can make and other health professionals can make good financial decisions, they will be rewarded and looked after in the future. And I think they will also mean, better patient care to patients as well.
It is an interesting issue. I know it's not a new issue, but obviously something that has come more to the fore as a result of COVID-19. Do you have these conversations with your colleagues about, the future and your journey and what they maybe should be doing in their own lives?
I guess I don't particularly bring it up, but yes, I've had some friends and colleagues ask me, my opinion on the market, a topic of conversation. I guess
they see you as the expert.
And I have had some discussions and happy to share my story.
And I love that you brought up choice as being one of the reasons that you are embarking on this. And when you are so young, you do have so many choices ahead of you, don't you? And you don't really want to be limiting yourself to what you could achieve in property. Do you ever see yourself going across to the property side full time, or do you love being a doctor too much?
Yeah, I enjoy being a doctor at the moment, but definitely passion and a hobby of mine is property investment, which I'll continue.
So when do you think that next purchase might come about?
Hopefully in the next few months, but we'll see. Yeah.
Well, Daniel, best of luck with all of that. You'll have to keep us updated. I can't wait to follow your property journey over the next few years, because you've clearly done it while I don't know how you could have done it working 60-hour weeks and overtime, and especially in COVID-19, it would have been a real challenge. But thank you so much for sharing your time today, because obviously you don't have much of it and there's plenty of other things you could be doing. But best of luck with everything and keep us updated.
Thanks for having me.
If you like this episode of the Smart Property Investment Show, please like or review us on whatever platform you're using to listen in. And if you, like Daniel, think that you have a great story to tell, reach out at editor@smartpropertyinvestment.com.au. Until next time, make sure you're staying up to date with everything smart property investment related on our website, as well as our Facebook, Twitter, and our LinkedIn. Until next time, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to secure finance to maximize your returns on your investment property? Finny can help. With access to over 70 lenders, Finny can find the right finance for your unique situation. So whether you're ready to refinance for a better rate, improve your cash flow, release equity to grow your portfolio, or are looking to find the right finance for your next purchase, we're here to help. Visit finny.com.au today to learn more.